But there are a few things that stand out. Let's get started on the Dixie. We'll do kind of a recap and a follow-up of yesterday. This is typically what happens in the market, especially if you are a swing trader. You have these ideas that you find, you look at, you predict well in advance. I'm talking days, I'm talking weeks. And then each day is simply like a little follow-up on that, where you kind of revisit it. You take note of if anything changed, if you have to make any adjustments. And again, like the sniper reference last week, you sit and wait to see if something happens. Now, daily chart, we're looking at this consolidation pattern right here. We're using the daily to kind of figure out where our next key level of structure was at. And you see this nice little retracement here. Price comes down. I'll ignore all the ebbs and flows in here. But this was our last little pullback before extending lower. Within that pullback, we have a nice little kind of range between that bearish candle and the open and the spike of that. We went down to a lower time frame and we identified a pattern formation here. We identified a consolidation pattern, right? Where we had an upper level range or a lower level range that was down here. We had an upper level range that was up here. And you can see that we broke and closed above our upper range. Now, here's the interesting thing about trading, especially discretionary trading. Give me a second to swig the water real quick. One of the questions that we'll need to ask is, how do we define a breakout and or how do we define a violation? Because what you'll see happen to a lot of traders is you'll see something like this, right? And then you'll see the fact that we broke out, that we came back in, and sometimes you'll get a little bit scared, right? We talked about, Jason and I did a Trader Coffee Break episode yesterday called Managing Emotions. Really, really good. We only got through about half of probably what we could have spoken about. But if you get a chance, make sure you watch that. Really good. We spoke about the effect that emotions have on a trader, and more specifically our trading decisions. And our thoughts are extremely powerful, guys. And what we think or how we feel will allow us or cause us to make certain decisions in the market. So let's take an example. I'm sure you guys have been here. Let's say you just took a breakout trade, right? Similar breakout trade, different instrument, and it broke out. You entered aggressively right on the breakout, and then it just went straight down and stopped you out. How do you think you would feel if you are in the shoes of an emotional trader? I know you guys aren't as emotional as you used to be, but how do you think you would feel? Right? You'd feel a little disappointed, right? Feel a little sad. What typically happens is we carry that emotion over to our next trade. So now all of a sudden, when we see this setup occurring in the market, we're a little bit nervous. We're a little bit scared because we have that recency bias. Man, the last trade I took like this did this. I really don't want to get involved. And as soon as you start thinking, I really don't want to get involved, then you start asking yourself questions, right? It starts snowballing. Is this really a breakout? Did we really break out of the range? Because we only closed by a little bit. And then we got one of those 3-bar reversal things Akil keeps talking about. Probably not like a real breakout, right? And then now what we're doing in that instance is now we are ignoring our technical rules for what is supposed to be and what is supposed to not be. And we are basing our decisions off of what we think or what we want it to be. And when we base our decisions off what we think or what we want, we're basing them off of emotions. And that is not a consistent way to go about things because our emotions are going to swing, right? That's the cool things about technicals, right? A technical rule is going to be a technical rule every single day. A break and close above today is going to be exactly the same as a break and close above tomorrow. Our emotional swings, however, I can be in a completely different mood today than I am tomorrow for various reasons. Reasons that happen inside the market, reasons that happen outside of the market, reasons that happen just in the natural flow of being a human being. So there's going to be no consistency in doing that. And you guys know the formula, right? Consistent analysis plus consistent execution equals consistent results. So you can't find yourself asking yourself the question, well, this is a breakout, but it's not a breakout I like because of this. You have to go with your rules. Now, I would say this. We also talk about journaling and upkeep and evolving as a trader a lot. If you have a situation where, let's say, the market breaks out of a range, or a structure level, I should say, by a single pip. Or let's say the market breaks out and immediately does a 3-bar reversal, like in this instance. What should you be doing? Well, you should be taking notes, right? You should be bringing out your little deal. You should be circling it, writing some notes, taking a screenshot. And you do it over and over again. This is part of your journaling and your review process. This is why it's so important. This is also something most traders won't do. In our journaling and our review process, we're looking for tendencies. Now, let's say you do this. I'm going to throw out a wild number. Let's say you do this 50 times over the course of a half-year period. I got a cool story about that as well. Let's say you do this 60 times over a half-year period. And you notice that 70% of the time, when you get a breakout followed directly by a 3-bar reversal, meaning the breakout candle is the first bar in your 3-bar reversal, let's say you're a pullback trader, let's say 70% of the time, it fails. You get a false break. How can that benefit your trading? Does that leave you a clue? What does it tell you? Well, now you have something quantifiable, right? That says, hey, if this happens, then this trade is likely to fail. Now, is that the same as having an emotional decision and thinking it's likely to fail because of something else? No. Now you have something that is proven. Now you have something where the numbers say that this is a lower probability trade than this. And now you can make the decision and make the adjustments in your trading rule where you no longer trade a breakout if this happens. Or if you're an aggressive breakout trader, remember what we spoke about yesterday, the graceful exit technique, where you're cutting your losses? If I enter aggressively on a breakout and I get a 3-bar reversal, then I use graceful exit technique after the close of the 3rd bar. And I get out for minimal loss, whatever like that. That's how you go about making adjustments to your trading plan. The other example I wanted to give you yesterday, I got a message from a guy who was talking about doing something similar, but time of the day. He noticed that like signals that came after 12:30 hit at a far less rate than signals that came before 12:30. And I was asking, do you have numbers to back it up? Is this true? Or you just like, you feel that way because you had a losing streak? And he went back, looked at his back testing numbers, went back, looked at his numbers. I think he's been trading for like 6 months, looked at his 6 months numbers, put the data together, and he noticed that, excuse me, this was a trend. There was actually proof that said signals for him after 12:30 were negative for his trading strategy. He just never thought to look at it before in his testing. So he's either made the adjustment or going to make the adjustment to cut out all signals after 12:30. He's just improved his trading. All right, so it's important to pay attention to this stuff. So we got the breakout. Now you're looking for the retest. We got the retest back in the structure, right? We're getting some consolidative candles right now. No doubt we're coming right at this consolidative zone as well. You can see this little pause right here where price was spiking up. We had a little bit of a rejection, ended up on the bullish side. Right at that level. Wouldn't be surprised if that was right at or near a 3D2 Fibonacci retracement. Fibonacci retracement, swing low to swing high. Yep, right on that 3D2 retracement. If you're a pullback trader, this is where you look for your pullback. You can look for your entry opportunity. Could be a higher high, higher close. Could be a double bottom. But this is your opportunity to trade it higher. And again, where are we looking to trade it higher to? I deleted my notes because I have a bad habit of liking to keep clean charts. But right up in this zone, remember we also had a 127 extension a little bit lower. We can actually add to that because we have more information than we did yesterday. So yesterday we didn't have this this swing low to swing high. So we only got information based off of this We had an AB equals CD pattern as well, but it was a little bit higher, so we're not going to draw that in. We can actually take another Fibonacci extension off this most recent move, swing low to swing high, and back down. And we can get a 127 up here, a 1618 right above that 105 level we were speaking of. A little bit early to do an AB equals CD, but we can always adjust this if we want. We want to really wait until we see this retracement turn around first and foremost. But an AB equals CD will put us right at that 1618 Fibonacci retracement. How do we know that? Because it hit a 3D2, and that's how math works. So we got a nice little zone. I guess you can start your conservative zone. I would say if you want to be super conservative, 104.50s, 104.50s to 105 evens, right? This is the area I would look for profit taking on this trade. Any questions about the Dixie? Hope you guys enjoyed the video, and if you ever want to be part of the discussion, feel free to join us in the live trading room. We run both a London and a New York-based session every Tuesday, Wednesday, and Thursday, and it is part of your risk-free trial membership at tier1trading.com. So check us out, www.tier1trading.com, featured in Forbes magazine as the leading innovators in trading education. If you're interested in learning how to trade, get started.